Coming up on the program, oil rallies with OPEC Plus set to prolong record production deal. Kenya tops Angola as sub-Saharan Africa's #3 economy. And ESCOM and World Bank meet as utility seeks to escape pollution gear. Thanks for joining us. This is Business Incorporated. I'm Chimeze Obi Iwagu. Let's get started with the market numbers at intraday. South Africa, JSE index and the Nigerian index went sideways. At intraday, the NSE index was down 0.35%, while the JSE index was up 1.03%. The market in Egypt is closed, but the blue chip index rose 1.89% on Thursday. Kenya was also up 1.89% on Thursday. And most major stock markets in the Middle East ended higher on Thursday, with Dubai leading the way by almost 2%. The Abu Dhabi index added 0.43%, driven by a 1.2% rise in Emirates Telecommunication. In Saudi Arabia, the benchmark index, which retreated 1.1% in early trade, closed down 0.2%, hurt by a 1.7% fall in Saudi Aramco shares and a 2.4% drop in Saudi British Bank. The Qatari index was up 0.42% as Qatar Islamic Bank gained 1.91%. And in Europe, markets rallied on Friday morning as investors digested an expansion of the European Central Bank's bond buying program and awaited the U.S. non-farm payrolls report due later in the day. Let's bring in Chelsea now for details. Hello, Chelsea. Good afternoon. Well, the U.S. has just released its latest update on unemployment and job losses for May as coronavirus roils the American labor market. What is the report saying?
Actually, a pretty surprising report. The numbers just came through. The expectations had been for another big drop in jobs, so a much higher unemployment rate and about 8 million more unemployed in May. That didn't happen at all. We actually saw hiring pick up in May and the unemployment rate fall to 13.3%. So really a big shock. And as you can see behind me, the DAX is spiking higher. So it does appear that the labor market in the U.S., which has been hit so hard by the coronavirus pandemic, has bottomed out. And now that they are moving forward with reopenings throughout the country, people are getting back to work. People who had been laid off and are now being rehired to work. So it does seem that the U.S. labor market has turned a corner here.
And back in Europe where you are, German airline Lufthansa is officially getting kicked out of the country's blue chip index. Lufthansa will leave the DAX 30 on June 22 after its share price collapsed due to the coronavirus pandemic. What does this mean for the company?
Well, it's certainly a symbolic blow to the company. Lufthansa has been in the DAX since its founding about 30 years ago. So they've really come up with the DAX, and now they're being demoted because they just are no longer one of the biggest companies in Germany. To be in the DAX 30, you have to be one of the 30 biggest companies in Germany. And Lufthansa, because of this big share slide this year, now they're about the 60th largest company in Germany. So they're going to be moved to a smaller index. And that could have some impact on the stock price because of algorithmic trading and how a lot of investors trade these days. They tend to follow the index. So there may be some repositioning that could weigh on the Lufthansa stock. But I think a lot of this is also very psychological. Lufthansa has really had its fortunes really hit by the coronavirus pandemic. They're taking a €9 billion bailout. They're going to be cutting a lot of jobs, restructuring. They're talking about spinning off units because even as we do start to see travel pick up again, they really don't expect business to be turning around and getting back to the way it was for several years. So they really are looking at a very long timeline of restructuring and reshuffling. And at the end of that, they do expect to be just a smaller company.
And speaking of the DAX, the index is on track to end the week with a gain of almost 10% after the German government and the European Central Bank announced fresh stimulus. Do investors in Frankfurt think the rally will continue?
There's certainly optimism that this is, the beginning of of the long-term turnaround for the market. This week in particular, there's been a lot of good news for German investors. We had the government come through here with a 130 billion euro stimulus program. Really, nobody had expected the stimulus package to be that big and broad. So that is expected to help the German economy recover. Germany has also been really leading the way in terms of reopening. And so we are sort of taking a lot of steps towards getting the economy back towards normal. And this was all really supercharged yesterday when the European Central Bank came out with more stimulus efforts as well. They're adding more to their bond buying program. So all of this really does sort of set Germany on the path to rebounding throughout the rest of the year. They are still expecting a contraction. Today we saw a new forecast from the government where they expect the economy to contract by about 7% this year. And to start to grow again next year. But if you look sort of at the downturns that other economies in Europe are facing, Germany does seem better positioned to ride this out, and that's really spurring a lot of optimism among investors here.
All right, Chelsea, thank you very much for those updates, and enjoy the rest of the weekend. And COVID-19 stimulus and vaccine hopes are sparking global stock rally. Let's see how that is playing out in the UK. Juliana joins us now to tell us more. Hello, Juliana. Good afternoon. Well, the ECB stimulus package and COVID-19 vaccine hopes are pushing stocks higher today. How has that shaped the London market at intraday?
Good afternoon, Chimeze. Well, there are strong gains on the FTSE at intraday. It started off on the high, and it looks like it's going to be going on to the weekend. Also with those gains, at intraday, the all-share is up by 1.03%. The FTSE 100 is up by 1.08%, and the FTSE 250 is up by 1.45%. In currencies, the pound is also up on the dollar by 0.34%, down on the euro by 0.33%, and up on the Japanese yen by 0.45%. Here in the UK, it's worth pointing out that the biggest risers on the FTSE all-share are actually the travel stocks and also house builders. Now, EasyJet and Carnival, they were demoted into the FTSE 250, which is more of a domestic market. They were demoted earlier this week, and both of them are doing pretty well in their new home. EasyJet, their shares were up by 9.4%, and Carnival, their shares are up by a whopping 11%, and that's because there seems to be a lot of hope that this lockdown will soon be once and for all finally over and people can start to travel again. And then house builders, all of them are leading the rally. Taylor Wimpey, Barratt Development, Berkeley Group and Peremison are all up at the moment because it appears as if consumers are getting a little bit confident and may indeed start buying houses again.
And Britain's financial watchdog has launched 30 enforcement investigations into firms that have given bad advice to customers about transferring out of their defined benefit pension schemes. What more can you tell us about this story?
Well, it's called contingent charging, and the FCA are really not happy with how some schemes have been handling it. For the past couple of years, the FCA have given the option for people that have large pensions to be able to transfer them, and that's pretty common here in Britain. It's also something that you can see with energy suppliers to keep the market competitive. If you're being overcharged by one loaner or lender, you can go to another one. But what they've been noticing since they've been reviewing it for the past 4 years is that there's been a high number of people that have been changing their service lender, but it hasn't benefited the customer. And in fact, they're actually focusing on one particular case study, which is the British Steel pension scheme. And what they notice is that each individual customer that transferred their scheme, the advisor who did the transfer was receiving £6,000. And the FCA, the watchdog, believed that because of this, a lot of advisors were given incentives to transfer customers without it being in their best interest. So they have launched these 30 investigations. The FCA have also reached out to thousands of customers that they believe could have been unfairly targeted, and they've given them advice on how they can potentially get some refunds from these agents that were doing this work.
Well, I guess it's been a great week, and so as the week wraps up today, what should we look out for in the coming week?
It has been an interesting week, and I suppose here in Britain, what a lot of people will be focusing on is the 8th of June and this new quarantine measure that comes in on Monday. We've already seen and witnessed across the world that the travel and tourism industry has been completely crippled by COVID-19. And just as the world starts opening its borders again, the travel industry do believe that Britain have decided to close their borders by asking people to quarantine for 14 days. There were talks this week between the government and the Home Office Minister Priti Patel and some airline bosses. BA decided not to join that call, and Willie Walsh, the IAG chief executive, the parent company that owns British Airways, they've said that they're actually seeking legal advice. They believe it's unlawful for Britain to do this at just the time the economy could begin to start ticking again. So it'd be interesting to see on Monday exactly how that pans out.
Well, we'll wait and see what happens eventually. In the meantime, enjoy the rest of the weekend. And stocks in Asia traded higher on Friday as investors digested the U.S. non-farm payrolls report. In Japan, the Nikkei 225 closed higher at 0.74%. The Topix index finished its trading day at 0.54% higher. South Korea's Kospi jumped 1.43% at 2,181 points. Hong Kong's Hang Seng index also maintained a high by 1.66%. Mainland Chinese stocks gained, with the Shanghai Composite rising 0.4%, while the Shenzhen Component added 0.37%. Meanwhile, shares in Australia closed with the S&P ASX 200 index up 0.12%. And in the U.S., stock futures were sharply higher early Friday, continuing big gains on the week as investors focused on the state's reopening and looked past dismal economic data. Dow Jones Industrial Average Futures added 285 points. The move implied an opening gain of about 277 points. At the open, S&P 500 futures gained 0.7%. Futures for the Nasdaq 100, which hit a record on Thursday, added 0.3%. The Dow is up 3.5% this week. The S&P 500 is up 2.2%, and the Nasdaq Composite is up 1.3% through Thursday's close. The gains came ahead of the Labor Department's latest jobs report, which came out early this morning by 8:30 a.m. Eastern Time. Economists polled by Dow Jones expected more than 8 million jobs were lost in May, but that didn't happen. Well, that decline would come after more than 200 million jobs were lost in April due to the coronavirus pandemic. Investors are betting that may mark the bottom for the economy as businesses begin to reopen. And the Organization of the Petroleum Exporting Countries and its allies, led by Russia, a group known as OPEC+, are expected to meet on Saturday, June the 6th. The global oil producers failed to meet at an earlier scheduled date, but Saturday's meeting, according to an OPEC delegate, will focus on extending a deal on output cuts. The scheduled meeting raised markets' expectations earlier today. Meanwhile, Brent crude futures hit the $40 a barrel, and the U.S. WTI crude futures rallied, hovering around $37 a barrel. Both benchmarks are set for a 6th weekly gain on the back of output cuts and signs of improving fuel demand as countries begin to ease restrictions to prevent the spread of the coronavirus. And gold prices are down today as market expectation for an economic recovery remain pained, putting the priced metal on track for a third consecutive weekly decline. Spot gold was down 0.2% at $1,706.91 an ounce, while U.S. gold futures slipped 0.7% at $1,714.50 an ounce. Elsewhere, silver was also down 0.4% to $17.66 an ounce, its highest since February the 26th, before retreating slightly to trade 1.8% higher at $18.16. Palladium rose 0.7% to $1,958.25 per ounce, while platinum declined 0.3% to $835.56 an ounce. There will be more after the break. Do stay with us. Nigeria's former coordinating minister for the economy, Ngozi Okonjo-Iweala, has been nominated to run for the Director General of the World Trade Organization position. President Muhammadu Buhari, who approved Okonjo-Iweala's nomination, withdrew the candidacy of Yernov Aga, Nigeria's permanent representative to WTO, for the same position ahead of the scheduled 2021 election in Geneva, Switzerland. Okonjo-Iweala, former managing director of the World Bank, currently chairs the Global Alliance for Vaccine and Immunization, Gavi. The organization's sixth Director General, Roberto Azevedo, on May the 14th, 2020, publicly announced that his resignation will take effect on August the 31st, 2020, before the end of his second four-year tenure expires. And the global COVID-19 lockdown has unprecedented impact on our personal and professional lives. This chaotic situation is forcing companies across the globe to rethink their business strategies. Now, most business leaders have decided to launch digital transformation initiatives to keep businesses running as smoothly as possible during the COVID-19 outbreak and to better prepare for the recovery phase. But let's look at how that is playing out in Africa, and I'm being joined by the founder and chief narrative officer of Cleos Advisory in the UK, Ted George. Hello, Ted. Thank you very much for joining us on the program.
Hi, nice to be here.
Now, COVID-19 is forcing everyone to digitalize rapidly. How are countries in West Africa responding?
Well, I think we've seen actually a remarkable response from all across West Africa, because, of course, West Africa is not new to outbreaks. We had the Ebola outbreak, and there were a lot of digital innovations that were created during that time, which are now showing their worth. We also have many countries where everyone has a mobile phone, or at least nearly everyone does. Many people are starting to do e-commerce anyway, and this is really, if you like, speeded it up. So I think what is very encouraging to see is that the general digitalization of the way people live their lives and do business in West Africa is accelerating thanks to COVID.
And I'm sure you've been following the market here in Nigeria. How are mobile payments and e-commerce adapting to COVID here in Nigeria?
What is interesting is to see in terms of mobile payments. It's always been the desire of governments and banks to be able to introduce universal free banking, and we're starting to see that. There are a number of mobile companies who've said that they will not charge anyone if they're doing minimum payments, let's say below $1, below 50 cents. And that really is the beginning of universal free banking. And we've seen that all across West Africa. We've also seen e-commerce adapting as well. What's interesting is if you think of all of the boda drivers, many taxi drivers, all the different kind of Uber and hail riding firms that there are in Nigeria, many of them, of course, saw a catastrophic drop in traffic. People simply couldn't travel to work. But a lot of them are now redeploying, of course, and they're actually delivering food instead, or medical supplies. So I think we're actually seeing quite a lot of the entrepreneurship of Nigerians, particularly in the e-commerce and payment space, saying, how can we use these tools and still actually work, rather than just saying, I can't do work my traditional way, I have to give up.
Blockchain has often been seen as a solution looking for a problem. Has it found its ideal user case with COVID?
Well, I would hope so. I think blockchain has been massively overhyped, and I think there are many times you simply don't need it. There are many times that actually an email or a WhatsApp message would be enough. But I think where blockchain is really showing its value is probably what you don't see in the economy. It's the deals going on between enormous companies where they need electronic signatures. Only 6 months ago, many lawyers around the world would say, I won't accept an electronic signature. They will now, because there's no other choice. If you think of exchange of documentation, it might be contracts. It might be an authorization to release 100,000 tons of cocoa or make a payment of $500,000. All that stuff can be done by blockchain networks. And the point about blockchain networks is that they come with a very high level of digital trust. It's not just like sending someone a PDF that can be corrupted. You cannot hack documents on the blockchain. So I think what we could see here as well is a lot of these blockchain platforms where, for example, you can go and you can buy assets, you can invest in different things using the blockchain. I think we're going to see them grow as well during this period. In fact, we've already seen quite a lot of investment in those because they offer this ability to actually do a high level of trust in transactions that you can only do digitally with a blockchain.
Now, Ted, how would you say social media networks are being used to combat the virus?
Well, I think the thing that can be said is Nigeria is a pioneer when it comes to the use of social media networks and outbreaks. If we think back to the outbreak of Ebola in Nigeria, it was deliberately spread to Nigeria by effectively a maniac. And it was thanks to the incredible efforts of many Nigerians who immediately started deploying on Facebook and on WhatsApp and various other platforms to disseminate information. And we've seen, for example, there's a campaign at the moment which is called Don't Go Viral, which is all about making sure that there is no misinformation spread during the virus, making sure people get it. And we've seen all the different social networks across West Africa leveraging that. One other thing as well is to do with how people use their telephones. There's a thing called a CDR, Call Data Record. It shows live where you are. One of the things that they're doing is they're actually tracking people when they're either calling up to report an outbreak of coronavirus, or whether they're ringing up for information. And if you track that live, you can actually immediately see where there potentially might be an outbreak somewhere, and you can immediately react. Bombard the area with text to tell people there's an outbreak, you must do the following things, but also send the resources to where they're needed, because they're quite limited. So I think social media, we're seeing an incredible flourishing of here, particularly so people can be properly informed about what they need to know.
Interesting. Now, is COVID a great opportunity to boost green energy?
Well, I hope so. I think basically we've seen green energy being enormously pushed. If you particularly think of some places like in Nigeria, where there is a huge amount of spending which goes on fuel and particularly importing of petroleum products from other countries, there's a real opportunity here to push very strongly for solar power, and particularly distributed solar models. And we've seen this, because if you have your own solar power in your own household, you don't need anyone to come and help with maintenance. You don't need to go out and get fuel. You don't need to mix with other people. So I think we're seeing a number of green solutions that are being offered, which are looking much more attractive now in the view of COVID and the impact it's having.
All right, thank you very much for your time, Ted. Ted George is the founder and chief narrative officer of Clio's Advisory in the UK. And Kenya's economy has moved up to become sub-Saharan Africa's third largest economy in dollar terms. That's according to the International Monetary Fund, which shows that Angola's economy, which held the number 3 spot, contracted every year since 2016 as oil output declined, and the kwanza was also devalued in 2019. Meanwhile, Kenya's shilling held steady as the nation's economy maintained an upward trend with improvements on almost all pillars of the index, most notably in the areas of market efficiency. IMF's estimates shows that the coronavirus pandemic and restrictions to limit its spread will probably see Angola's gross domestic product contract 1.4% in 2020, while Kenya is projected to grow by 1%. And Eskom Holdings Limited says it is unwilling to spend the 42 billion rand needed to install a fuel gas desulfurization equipment required to reduce sulfur dioxide emissions at its Madupi power plant. The management of Eskom Holdings Limited and the World Bank, during a meeting on the status of a $3.75 billion power plant loan, said it is seeking to breach the loan terms by skipping the installation of pollution abatement equipment. Eskom, which has 454 billion rand, approximately $27 billion in debt, says it is yet to formally approach South Africa's Environment Ministry over its plans. And that's it on the program. Thank you for watching. I'm Chimezi Obi Iwago.